Taking a look at the currency market now with Shireen Darmalingam, Macroeconomic Strategist at Standard Bank. Thanks so much, Shireen, for joining us this morning. I'm just looking at an RMB report that filtered through this morning saying that the messy world of politics has halted the risk-on rally. Let's get your perspective on the kind of action we're seeing, because certainly that Slovakian vote not coming through yesterday throwing a spanner in the works.
Indeed, that really did throw a spanner in the works. We are expected to see the Eurozone struggle for some time, and the volatility levels will increase regarding that. Slovakia has indicated that Greece has been patchy with regards to its commitment to resolve the debt saga going on in the Eurozone. But news trickling in this morning have indicated that Slovakia could possibly give its vote a yes at the second vote. So there is some concern coming through that could really turn around, but indications at this point is that that vote could really come in positive, and that it could obviously lead to some strengthening in the Eurozone and some sentiment being back on if that vote does go through. However, at this point, there's still some concern that that may not just happen.
Well, for now, the euro managing to hold its own, holding pretty steady in morning trade. We've had outgoing European Central Bank President Jean-Claude Trichet saying that the common currency was a credible and stable currency. Has the market reacted at all to that kind of rhetoric that comes through? Does it offer any reassurance when there's just so much uncertainty and lack of detail about?
I do believe that the uncertainty levels have increased and the volatility has increased, and that's really going to put us, as you mentioned earlier, a spanner in the works for the euro going forward today. There has been indications that the Eurozone, that the G20 meeting, not the G20 meeting, the Euro Commission's meeting is expected to be delayed at least till the 23rd of this month, and then going into the G20 meeting going through to November, the beginning of November. I think we're likely to see those volatility and uncertainty levels continue through till those dates, and at least until we see some resolutions coming through from Germany and France with regards to the recapitalization of the banking sector there. So volatility is likely to be quite high going forward.
So little reassurance coming through from that kind of commentary that's coming through from the ECB president. In the meantime, on the other side of the Atlantic, the picture not looking much better either. We've started to see US earnings filtered through, and Alcoa not starting things off in a very positive light.
Yes, yesterday was quite a bit bleak. We did see towards the end of last week we saw encouraging US data come out, and that really caused the dollar to strengthen. But yesterday's data was very disappointing, and we could see more of that come through as the earnings reports come out. So sentiment's really likely to be driven by the earnings reports going forward, and investors will really be looking towards that to gauge the extent of the global economic slowdown and the impact that it's having on the rest of the world.
So what kind of movement are you anticipating then on the dollar front relative to kind of movement we're anticipating on the euro?
We do expect the dollar to receive some pressure and to possibly weaken. For the rand, for instance, we do expect the rand to take direction from that, but today we are seeing some local data coming out, the manufacturing data coming out, and the rand could obviously draw some direction from the local developments that we are seeing.
Let's take a look at manufacturing and mining data, because from Standard Bank's perspective, you seem to be out of line with consensus on this case, and you're looking for an increase coming through on both fronts.
Yes, we are looking for an increase. We did see July's numbers, the manufacturing growth in July declined by 6% year on year. And that, if you recall, we did see prolonged strike activity in the manufacturing sector in July, and that would really have pressured those numbers quite low. We did see the PMI number for August also come in substantially lower, well, not substantially lower, well, at least below the 50 benchmark level. But due to the fact that those strikes have abated in August, we could see some positive number come in and a pickup come in for this month. A very mild pickup, actually, not very great. An increase of 0.4% expected against consensus decline of 0.6% year on year.
Overall, Shireen, what's your outlook for the trading range, or what kind of trading range have you pegged out for the local unit for today? Because certainly yesterday's moves above 8 to the dollar being labelled as exaggerated.
We do expect the rand, obviously if the manufacturing data comes in better than expected, we could see rand bulls possibly breach 790 to the downside, and if that happens, we could see a move towards 774. However, if it does come in weaker than expected, we could see a move back towards, well, above 8 and towards 810.